Thanks for stopping by the Vertical Spread Options Trading YouTube channel. My name is Eric, and by the end of this video, you're going to walk away with a swing trading strategy for the S&P 500 using only one very common indicator on two time frames. You're going to see the results of the backtest as well as a detailed explanation of how to implement this strategy on your own, regardless of what platform you use. I'm going to break down the whole thing for you in just a minute. But before we get started, you should know that everything presented in this video and on this channel is for informational purposes only, and that I am not a financial advisor of any kind. So I've got the swing trading, the S&P strategy with a single indicator using two time frames with results coming right up. All right, so let's get started. Before we get into the strategy and how to trade it, I want to start with the results. We're going to kind of work backwards, and I want to really talk through everything you're seeing and the results from this, and then we're going to break it down into the actual strategy and the indicator and how to set it up and all that stuff. And I'm doing all of this in the Thinkorswim platform. So if you're a TOS user or a Thinkorswim user, I think this is going to be a really good overview of some of the capabilities that most people don't use because you either have to, you got to be a programmer or whatever. I actually had someone help me program this strategy because this is what I wanted to see, and I got someone to program it for me. And by the way, the strategy you see, I'm going to make available to patrons over on Patreon. So if you want to download this strategy so you can import it into your Thinkorswim platform, consider joining Patreon. You'll be able to download that. It's pretty easy. It's really just some code there. So, but even if you're not a Thinkorswim user, by the end of this video, I guarantee you're going to be able to set this up in whatever platform that you use, because we're really just using one simple indicator that's sort of driving all the decisions for the strategy, and that's the Bollinger Band. So if you have a platform, or if your platform has Bollinger Bands, you're going to be able to put that in there. And again, once we get down to the indicator level of the video, you'll know what the settings are and all that stuff. And we'll talk about kind of the conceptual side. But I really want to just start with the results of the strategy. And we're going to do that looking at the SPY. You guys know I'm hyper focused on SPY. And part of the reason for that is because it has the most liquid options. You can scale it up to SPX. You can trade small when you want to practice, maybe practice a strategy and maybe not want to, go full blown. So I really like SPY. It keeps me hyper focused on the market. There's tons of time frames and things you can do. So let's look at the chart and just kind of go through what you're seeing here so there's no confusion. So we're looking at SPY, as I mentioned, and we're looking at the 4-hour chart. And the 4-hour chart is our smaller time frame. Remember, this is a multi-time frame, MOBO, where is it? MOBO, multi-time frame. This is a multi-time frame strategy. The 4-hour chart is the smaller time frame. That's the time frame that you're going to be watching for the actual signal. Should I go long? Should I go short? The weekly chart, which we'll look at in a little bit, the weekly chart is sort of telling you, okay, which direction are you going to take the trade? So when the weekly chart is on a long signal, you're going to be looking for 4-hour long signals. And when the weekly chart is on a short signal, you're going to be looking at 4-hour short signals. And so this is what you're seeing here. You're seeing the 4-hour short signals or long and short signals, but this is based on what the weekly chart is doing, which you're not seeing right now. So that's the first thing. So you're seeing long and short signals, and those signals are taken or not taken based on what the weekly chart is doing. So I'm going to open up the studies here. I'm going to go edit studies. I have two indicators, if you will. I have the MOBO indicator, which we're going to talk about in more detail later. And I think I did this in a previous video. The MOBO indicator is on here just so we can see the colors and whatnot. But the strategy is also on there. And when you're in Thinkorswim, if you go to the strategies tab, there's a lot of strategies already built in here. This strategy is custom made because I wanted to kind of see, I had an idea and I wanted to work through it. So I had someone help me configure this, and then I imported it. Again, if you want to import the MOBO multi-time frame strategy, then consider joining Patreon, and you can download it and you can import it, and it'll show up here in your strategies and you can apply it to the chart. So the first thing you'll notice is And if you're not used to working with the strategies, that's fine. But there are no stops and there are no targets. This strategy, what we're seeing is simply buy when the MOBO band goes long, if the weekly's long, and then when it goes short, you're going to close the trade. So the short signal, if you will, is closing the trade after a long signal and vice versa. And if we come into the actual strategy, we can see that here's the Bollinger Band settings, which we've talked about in a previous video. But basically, the larger time frame we're looking at is the week. So the weekly chart has to be long for you to take a long 4-hour chart signal, and it has to be short to take the short signal. And here's some of the settings in here. And I'm not going to get too much in the weeds on the strategies because there's a lot of things going on in here, but I just wanted to show you that what's sort of included in the strategy and how that works. So I'm going to close that. The other thing is in the global strategy settings, basically when the buy signal, valid buy signal happens, we're buying 100 contracts or 100 shares of SPY. So that's what you're seeing. These results are buying shares. There isn't a way that I know of to say buy calls or sell spreads or whatever. This is simply going long by buying stock and then going short by selling stock. And when we cover, we just close the trade. And so these are just the results of buying SPY and selling SPY over the time frame. So I wanted to just kind of point out, even though, I'm going to be looking to apply this strategy to option spreads or buying calls or puts, what we're seeing in this moment in this video is just the results of buying 100 shares when we go long and covering, and then selling short 100 shares when we go short. So we know that we can apply that to options by buying calls and puts, but I don't have a way to put that in the results. So I just wanted to be clear about what we're seeing here, that this is not yet quite applied to a full-blown option strategies like some of my previous videos. So I'm going to close out of that. And again, we have the floating P&L over the time frame. So as you're in a trade, it's going to go up and down. You can see over the past year and a half, and we'll talk about the time frame here in a minute. Let me go ahead and cancel all that. If this started trading on, actually, let me just show you. So when I right click, I'm going to show the report. These are all the trades. And again, I'm going to put the spreadsheet, or I can download this to a CSV file. If you want to see all the entries and exits and the time frames, you can see that with the 4-hour chart. Let's go back to the top. There's basically 2 candles per day, one at 9 a.m. and one at 1 p.m. So there's really only 2 times of the day that you probably need to pay attention. If the trigger is long or whatever, you're going to take the signal and I know the market doesn't open until 9:30, but the pre-market action is sort of included in there. So you kind of keep that in mind. This is the best we can do with some of the software, right? But basically with the 4-hour chart, there's 2 candles a day. So the very first trade that we see in the strategy was taken on August 30th, 2017. So why August 30th, 2017? And the reason why is because in Thinkorswim right now, for the 4-hour chart, I can only go back 360 days. This is 360 trading days, though, not calendar days. So we're basically getting just under a year and a half. So one of the things I'm thinking about is, okay, what if I redid this video and strategy as the market goes up or down? You can see the market's, if I get out of here, if the market's just, been chopping relatively sideways, a little bullish, bias here, but essentially the market hasn't done all that much in the past year and a half. It's up technically, but in the past year, it's relatively flat, if not going lower, depending on what happens with the next Fed announcement. But anyway, so I may look to continue to walk this forward and say, okay, maybe every couple months, maybe every quarter or something, I'll repost this and we can kind of just see how that goes. Now, again, it's going to start in different places. We won't have a cumulative P&L, but it'd be interesting to see just to walk this strategy forward, knowing that we can get about a year and a half of time in the strategy. And as the market, if we get a true bear market, it'd be interesting to see how it does, right? So anyway, stay tuned, subscribe to the channel, and definitely I'll be posting on Patreon some of these things too. So, all right, so let's go back to the report. And I wanted to just kind of point out a couple things. So we talked about how the first trade was about a year and a half ago, August 30th. The last trade actually just triggered on December 14th. That was Friday. So what I did to, look at this strategy was I bought some SDS. I've been in and out of SSO and SDS a little bit. This is outside of options. SDS is a 2x inverse. So even if you're not an options trader and you want to maybe take advantage of this strategy, you can just simply buy the SPY or even SSO. We'll look at those maybe later in another video. SSO is a 2x bull ETF, and SDS is a 2x bear ETF. And since these are relatively short-term trades, then those ETFs are could be valid. You don't want to hold those for a long time. That's a whole nother thing. But anyway, I wanted to just kind of point this out. With this strategy, with the 4-hour chart, there were 26 trades in the past year and a half. And, as of Friday or so, we had made, let's call it $4,000. This does not include commission. So I'm going to round this down to just say, okay, in the past year and a half, buying 100 shares, selling 100 shares, made about $4,000. So if we go back to when the first trade was initiated, which was right around this area, I think we said August 30th. It was S&P was trading for about 245. So 245 is about $25,000 to buy 100 shares. So you think about that for a second. If you started with $25,000 and you're trading this, you'd be up about 4,000, which is about 16%. So when you think about where the market has been, I'd have to do the math on that, but you could be outperforming the market, especially if it turns into a bear market and you can continue that 16%. Just think how powerful that could be, and that's why we're going to keep walking this forward. The other interesting thing is if you wanted to leverage your money, and again, it's a little bit riskier, but if you did SSO, and I have to go back in here and refresh the strategy so the P&L shows up. SSO started around the same time frame, and SSO is a lot cheaper. It's let's call it $90 per share when this started, and you had made 3,500 or so. So that's closer to 30%, and that's in line with what the SSO is supposed to perform. It's about 2 times the S&P performance. So if the S&P goes up 1%, SSO is going to go up 2%. Now it's rebalanced and a bunch of stuff. So there's actually some built-in fees and things. So you don't actually get 2%, but it kind of lines up. If you got 16% on SPY and you're making 30% here, it's about twice the gains. And this would be shorting SSO as well, which you don't have to do. You could actually just do SDS. But anyway, I'm kind of digressing here with how to apply this. But I always have to do this part. Okay, so again, the strategy, this strategy took 26 trades, made about $4,000. The max trade here was $1,300, which was, where was that? Right in this area, which is about April of last year. And let me find the biggest loss here. I think the biggest loss was $469. I'm gonna put this spreadsheet in over on Patreon. So if you want to download this and analyze, I haven't looked at like the average duration and the Sharpe ratio and any of that stuff. I'm kind of just showing you some raw data here inside of the Thinkorswim platform. So let's zoom into a little section here and just kind of, get an idea of just, how to enter and exit. And basically, here's an entry where the market broke above the MOBO bands. And again, we're going to completely break down these bands here in a little bit. And that was the long signal. And you basically just stayed long until it went short. So in order for the strategy to take this long signal, that means the weekly chart MOBO band also had to be long. And then you closed the trade, and then it went up again, and you closed the trade. So this was, a smaller win, and you're going to get some losses. And the general idea is when you do get the losses that they're contained, because you're only taking losses in the direction of the larger trend. And when that trend shifts, you're no longer trading that direction. So it's still possible to get kind of chopped out. And that's something we have to consider when we're buying. If you decide you want to look at buying call options or whatever, you got to consider that you're going to get chopped out. And, for this particular trade, if you had bought a call option here, and then 4 or 5 days later you sold it here, you could have lost 50% of your call option. So, that's something that's not factored in with these results, or actual option buying results. One of the things, you guys know I like to sell credit spreads. One of the things I'm going to be looking at is selling credit spreads on the long signals out of the money, and potentially letting theta and time decay and all that stuff kind of work in your favor despite what the short signals do. So but in general, buying the stock, when you buy stock, you're able to just hang on to it without time decay. So that's one of the things that you have to think about in time when buying options. And you probably read that in every book you own about options. But eventually you get another one, and you kind of get up there. So this strategy, oh, that was a pretty good one, right? Got in here at 267, got out 282, and you just kind of watch it and wait for the exit signal. You see the P&L kind of going up and down as you're in the trade as well. That's why that's doing that. So that's in general what the signal is. That's the entry. That's the exit. When you're on the weekly long signal, you're going to buy on a breakout of the mobile band, and you're going to close it on a breakdown of the mobile band. And on a weekly short signal, and we'll look at the weekly stuff here in a minute, it's the opposite. When you're on a weekly short signal, you're going to open a trade on a 4-hour short signal and close it on a 4-hour long signal. So again, there's no stops, there's no targets factored into the strategy. And now let me just say this. I'm not saying you can't put in a stop, and I'm not saying you can't trail stop it or find targets if you're using some other things. I just wanted to show you exactly what this strategy is doing and the results of that. And this, again, a lot of the things I post on here are foundational things that I encourage you to take and tweak and try on different indicators and stocks and things. But again, what we're seeing here is opening on a band breakout and closing on a band breakdown, again, depending on what the weekly chart is doing. All right, now that we have a general idea of the strategy of what that looks like, how it's performed the last year and a half, now I want to kind of get into the indicator, and we're going to start with a super. I'm going to switch back to a daily chart just to kind of clean this up, and then I'm going to just put on the Bollinger Band, because that's really that entire strategy is based on this one indicator, and the settings are a little different, but I wanted to just do a real quick Bollinger Band overview. And to me, there's two ways to trade Bollinger Bands. In some of my previous videos, and I still do this, when there's extreme Bollinger Band movement, meaning extreme closes outside the band, I actually like to get a little bit contrarian, because volatility can be high, very high, and you can sell against that depending on the momentum. But this is a different Bollinger Band than the strategy we're talking about today. The default settings of the Bollinger Band is a period of 20. That's a 20 period look back with 2 standard deviation bands, 2 standard deviations above the moving average, which is the 20 simple moving average, the 20 period look back, and 2 standard deviations below. So what is difficult sometimes is when there is a volatility breakout to the downside. What my experience, what I've seen is that, to me, is not the time to get short. There's usually some sort of snapback, which is why I like to be a little contrarian. But in this strategy, using what I'll call it a modified Bollinger Band, and Thinkorswim, there's an indicator, it's called the MOBO indicator, and we'll look at that. But let's just modify the Bollinger Band. For those that don't have TOS, let's go ahead and modify the Bollinger Band to match the MOBO indicator. So we're going to come in here, and we're going to edit the studies here, and I'm going to change the look back to 10. So it's a shorter period, and numlock is not working. There we go. Oh my gosh, that was difficult. And the bands are not two standard deviations. We're going to do a minus 0.8, which is 8/10 of one standard deviation, and 0.8. And the reason why I'm using these settings, these are the default settings for the MOBO bands. I did not make these up and I didn't tweak them. I'm just going with some out of the box stuff and back testing it. So those are our bands now. A shorter look back and a narrower band. So let's do that. So that's exactly what we're seeing now. So in this case, now the band, you're going to get a lot more choppy action. You're going to get breakouts here, a breakdown here, a breakout here. So it's very choppy, which is why you can't just look at one time frame and say, okay, well, I'm going to buy above the upper band and short on the lower band, and then you would buy and then you would short. And yeah, you're going to get a big swoosh and do that and do okay, but you're going to buy here and get stopped out. And so to me, it's more consistent to use this sort of method as a momentum breakout only if the larger time frame is kind of working. So if you're in Thinkorswim, we're going to add the mobile bands. But if you're using E-Trade or Interactive Brokers or Tastyworks, I'm pretty sure you can just throw a Bollinger Band on there, and you can change the settings like we talked about. So we're using a 10, negative 0.8, and 0.8 as the bands, and then you'll just want to look at and see what the weekly chart is doing. So what I'm going to do right now is I'm going to go ahead and add the Thinkorswim study, which kind of makes it a little bit easier. It's called the FW_MOBO basic. I'm going to put that on there. I'm going to go ahead and leave the bands on here, and you'll see kind of how they line up. So now you can see that the MOBO band exactly lines up with that modified Bollinger Band, but it actually does the super fancy thing of changing the colors, right? The other thing the MOBO band does not consider, and I'm kind of rethinking this a little bit, but the MOBO band does not have the moving average in here. So if I come in here and I remove the Bollinger Band, the MOBO band is just the bands and not the moving average. So I still like to kind of use the moving average on a daily chart as sort of a reference point. But for the sake of this strategy, again, we're just going to be buying and selling based on breakouts or breakdowns, with the weekly chart. So that's essentially the indicator we're using. It's a modified Bollinger Band, and it's a shorter period look back, and it's a little bit more narrow, which can generate a lot of false signals, which is why we want to make sure that we're trading in the direction of the bigger trend. So let's go ahead and just kind of, overview look at the bigger trend. And we're going to be considering the weekly chart. And I'm going to put up 20 years of weekly chart MOBO band on SPY. And you can see that here was the financial crisis. And, let's just say you're not a trader at all. I think this is, a very good thing to just watch it, watch every week, just to say, you know what, things are getting ugly here. Maybe I need to protect myself, or maybe, maybe I should just kind of pay attention to the market. And obviously, you still get false breakdowns. And one thing I really want to point out here is you should definitely not use this on the weekly chart for entries and exits. And let me just show you why, because you can totally get chopped out. Here you got a breakdown, right? So if you had sold all your stocks, in your 401k or whatever, which would be a ridiculous thing, then the market reversed, you're actually going to be incurring fees and commissions. So, what I would consider is when you look at this, just say, hey, maybe I need to pay attention to this. If this thing doesn't reverse, maybe something uglier is going to happen, or maybe you buy some protection here. Maybe you sell some calls or whatever it is. There's just some ideas. I just want to tell you to not use this as a trading entries and exits for swing trading, because you're going to get chopped out a lot. So here you could go long, then you go short, and then Obviously when it came to the, kind of financial crisis, um, back in '08 and stuff, '07, this was a good warning sign saying, hey, we're really getting a lot of this chop, and eventually it kind of moves lower. So, um, you know, this isn't meant for you to use it, but it does give you an idea that, hey, you know what, there's a dip happening. Should I be buying the dip? Should I be protecting myself? It's just kind of something to be aware of. It is not a trading decision or any kind of long-term investment decision, because as you can see, there's a lot of, quote unquote, false signals, if you will. They're more just warnings like, hey, there's some momentum to the downside. Is this going to hold? I don't know. When the Fed's printing money, it didn't hold. When the Fed stops printing money, maybe it's starting to hold. So on the weekly chart, and let's just kind of zoom into the current time frame, the general idea is and we'll just kind of come in here, when the market rallies up and closes above the band, you are on let's call it a long signal or long watch. Doesn't mean you trade or do anything here. It just means that now what this strategy backtest that we looked at says is, okay, so now anytime the 4-hour chart now triggers long, the strategy is going to buy those 100 shares. So the other thing you'll see is a lot of kind of pullbacks. And this is where I kind of, am interested in the middle band, because in the context of this large trend, you're always going to get some pullbacks, some buy the dip moments. And when you do get that dip, when the 4-hour chart fires long again, that's when you can go long, according to the strategy, obviously. So, and I want to look at this sort of massive breakdown and what the strategy sort of did during this. And I want you to, and I think it's cool that when you look at it, the sort of these turning points where, well, what would have happened here? Well, essentially you're on a long signal, so you're not taking any short signals based on this strategy. So you're not going to make money, if you will, on this downside, because it didn't trigger long until trigger short till the second week. So I'm going to put a couple arrows here. So as we go down to the shorter time frame, this candle, and we'll edit that to be a down arrow. That was the actual, that's where the actual trigger was. Okay, this is the candle that was sort of the reversal candle. So now I'm going to switch to back to the 4-hour chart where we would be looking for signals. Let me zoom out a little bit where those arrows at. Here's the arrows. So I want you to think about this. Up until this point, we had a big long stretch. You were long the SPY. The strategy was long the SPY here, although it looks like it got chopped around a little bit. It went long here and basically closed out on the reversal candle. That large, this is the week, this is a 4-hour. Remember, there's 2 bars in a day, so 10, about 10 of these bars is 1 week. So this bar is the reversal. So the strategy got you out on the reversal. Now, did you give up some gains? Yes. You are not going to get out at the top, and you are not going to get in at the bottom here. You are going to be taken out when the band breaks, when it breaks below that band, which in this case, yeah, the peak was here at 286 and you got out at 281. So you lost 50 S&P points. That's kind of a lot, right? But still, with the context of getting in at 267 and riding that up to 280, 286, what's that, 260 points? So yeah, you made 200 points, approximately, and you got out 50 points later. So the next thing to look at is the next candle was here. This was the candle that actually triggered short. So technically, in the reversal candle, you would still be looking to go long, but because it's so ugly, you never got the long signal. So you did not get, you did not go long on the reversal candle. You actually didn't go long at all, because at this point, now you are shorting here. So, but you never got a short signal. So really what happened, this strategy basically kept you out of the giant reversal. Now, if you're a short seller, you just got to understand that you missed it, right? And there's some other things we can look at for catching that, and that's where the extreme Bollinger Band thing comes in, and that's going to be a different video. But essentially, over the next several weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks or so, the weekly chart is in a negative sort of mode. So at this point, you're not looking to go long until that goes long again. Now, did that part make money? I don't know. Let's look at it. So here, now we're going short. We're shorting here. We're getting stopped out here. We're shorting here. We're getting stopped out here. So both of these are small losses, right? Technically, you did not make any money. We shorted here, and we got stopped out. And I'm using the term stop. You're not getting stopped out. You're getting signaled out. So we shorted here. Small loss, shorted here, small loss, shorted here, big gain, right? And this is typical of bear market stuff, right? Where you're going to get chopped out, and when it goes down big and fast. So here, you're shorting, if you will, at 275, and you're getting out at 263, which is 12 SPY points times 10. That's about 120 SPY points, if you will. And, just think about, the option side of that and how you could possibly apply it. And we'll, again, another video. But here you're going long. I'm sorry, you're stopping out and you're not going long yet. And it wasn't until this candle that the weekly chart went long. So at this point, you're no longer shorting here. And now you're taking long signals to the upside. You get stopped out. You're not, so I just wanted to kind of go through one of these massive reversals. And the takeaway for me here is if you're trading in the direction of the weekly chart momentum, you're going to avoid some of those big reversals about knowing when to get out. And you're going to know when to get out because the Bollinger Band told you here, hey, close your long and wait for the next long signal. That saved you a ton of money here. So I think by now you should have a pretty good idea of how this strategy works and kind of the whole gist of the thing, multi-time frame, one indicator. If you have any questions or want some clarification, definitely put something in the comment section. I'll be checking that over the next few days or so. And don't forget, if you're a TOS user and you'd like to get the full strategy for your platform and you want to get the spreadsheet with the trades that already came out, that's going to be made available to patrons over on Patreon. So at the homepage of the YouTube channel, you can click Become a Patron. You can sign up there. And don't forget to subscribe and like the video as well. I look forward to the comments, and I look forward to posting this strategy again in maybe a couple months, and we'll kind of just, like I said previously, we'll walk this forward. So you guys have a great day. Thanks for watching, and we'll see you at the next video.